Welcome back everyone, I hope you're doing well, and in this video, we're going to take a look at my dividend growth portfolio that now has a value of over $93,000. I'm going to share with you the stocks that I own, how much dividend income I collect, and the performance of this account in the month of March. This portfolio is built up of 25 blue chip dividend paying companies. These are the big names on the market with strong operations that generate billions of dollars of income and cash flow every single year. And these companies are able to return that capital to their investors every single quarter in the form of a growing cash dividend. And the long-term goal of this portfolio is to one day achieve true financial freedom and have the passive dividend income that it produces cover all of my monthly expenses, so I would no longer have to work for money. Instead, my investments can pay for my lifestyle. And before we actually take a look at the holdings in depth, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button and subscribe for the daily videos. And now we're going to jump in to my financial freedom portfolio, which has a total value of $93,136, and that includes all of my equity positions plus the few $1,000s of cash I have sitting in the brokerage right now. And this portfolio every single year will provide me with $2,061 in annual passive dividend income. So what that means is if I never buy any more stocks, if I don't sell anything, and none of my companies were to increase or decrease their dividend, over the next 12 months, I'm expected to collect $2,061 without having to clock in at a job to earn this income. That's my capital earning me more money through the form of the passive dividend income that my stocks provide me every 90 days. And as I continue to build up this portfolio, contribute more capital every single month, buy more shares, and reinvest the dividends I collect, this amount will only continue to grow every single month. And at this current point in time, my portfolio yield is at 2.2%, which I do understand is on the lower end compared to what you can find on the market in terms of current dividend yields. But overall, I'm still very young and my portfolio is focused on long-term dividend growth. So I choose to invest in companies who may have a lower starting yield right now, but I believe have the ability to continue to pay out and grow that dividend anywhere from 5 to 10% per year over the next 10, 20, and 30 years in the future through growing revenue, net income, and cash flows every single year. And I'm here for the total return. Yes, I'm a dividend investor and I only own companies who pay out a dividend, but I am also focused on collecting a very solid total return through share price appreciation and that growing quarterly dividend. And right now, my average portfolio dividend growth rate is at 6.9%. So that means every single year, the average growth rate of my annual income from my existing holdings is right around 7% per year. And next, we're going to take a look at how this portfolio performed in the month of March 2021. So we started the month with a total portfolio value of $83,643. And we're going to go over my dividend income, my contributions, and the share price appreciation over the last 31 days. So we started the month just above $83,600, and we collected in total $204 of passive dividend income in the month of March. And also in that same month, I contributed $2,500 of my own capital into the portfolio. So right now, we're still very early on in my investing journey, so it's really focused on contributing as much capital as possible, buying these strong companies, and over the next 5 to 10 years, that's when the snowball effect starts to begin, and I will see more growth coming from the actual share price appreciation and the dividends rather than my capital contributions. So this month, I fulfilled my goal of contributing $2,500 into this portfolio, which I'm planning to do every single month throughout 2021. And then also, my actual share price appreciation over the last 31 days was $4,554, and the Dow has been trading at record highs. And because I own a lot of the traditional value companies, that really means that my stocks have been performing very well. And the month-end value of my portfolio was $90,901, which means in only one single month, the total value of my portfolio increased over $7,000, which is absolutely incredible. And why we have a difference from this value and what's on my account right now is because I'm recording this 2 days after month end, and I do always make a big contribution on the first day of every month to get the next 30 days started. So that's where the difference is coming in, but the true value of my portfolio at the end of March 2021 was $90,901. And my total annual income, like we saw at the end of the month, was at $2,061 of pure passive income. And that amount grew as well because as of March 1st, 2021, my annual dividend income was at $2,016. So I was able to boost it up through my 2 purchases I made in the month of March, which were 20 shares of Next Era Energy and 10 more shares of Taiwan Semiconductor. And in total, that added around $47 to $48 of annual dividend income, bringing me up to the $2,061 that we currently sit at right now. And next, we're going to move on to my portfolio spreadsheet to take a look at all of the different stocks that I own at this current point in time. So we can see this is a very simple spreadsheet that I created to list all my different holdings, how many shares, the total market price per share, my overall market value of each individual holding, and my total gain or loss on each position. And I also have the dividend information for each of these individual companies right here on the right, and it shows you their current dividend, the average yield, and my annual income from each individual stock, as well as their next ex-dividend date and the total value of this position out of my overall portfolio. And if you ever want to take a look at what stocks I own and how my portfolio is performing, you can always take a look at this spreadsheet for absolutely free using the link in my description. I will never charge you for access to this portfolio, and I'm always transparent on all the companies that I own and my total performance, the gain or loss from each position. And overall, we can see that I am diversified across many different sectors, including tech, financials, consumers, healthcare, and communication. And of course, by far, tech makes up a majority of my portfolio, coming in at 37%. And some of the big names I own in that sector include Apple, Microsoft, Visa, MasterCard, Broadcom, and Taiwan Semi. And then of course, in the financial sector, I own the 2 biggest banks in the United States and the 2 largest Canadian banks in JPM, Bank of America, and from Canada, Royal Bank of Canada, and TD Bank. And what a lot of investors don't know, that up in Canada, they have an oligopoly in the financial sector where their 5 main banks control the entire country. So owning any of the big 5 Canadian banks is actually a very strong investment because of how well regulated their industry is up in that country, that there's not many competitors entering into that space. And in Canada, there's not as many fintech companies competing in the market like we have here in the United States. So right now, I choose to own 2 American banks and 2 of the larger Canadian banks as well. And as the financial sector has seen a massive rebound over the past few months, I have been racking up some incredible share price gains on these 4 holdings. I am up over 30% on 3 of the banks and up over 18% on Royal Bank of Canada. And then the next sector I own is of course communications, and these are the 2 companies I have for their very high dividend income in AT&T and Verizon. These are the 2 leaders in the space. These are a big part of many dividend investors' portfolios. And of course, I own them for their massive over 4% and close to 7% annual dividend yield. And with 5G expanding at a rapid rate, plus the fact that these companies, I believe, are trading at very attractive valuations, I might be buying more of the communication sector over the next few months. And next, we're going to go over my healthcare holdings, which include AbbVie, Johnson & Johnson, Merck, and Pfizer, 4 big names with nice dividend yields, and all operate in kind of different sectors of the overall healthcare market. We have a few big pharma names and some more traditional healthcare companies as well. And this is a sector I do believe will continue to perform very well over the long term. They provide necessities and some core holdings to my portfolio I have no plan of selling anytime soon. And next, we have my 2 consumer discretionary holdings, which include Home Depot and Lowe's. Of course, these 2 companies are direct competitors and dominate the home improvement warehouse industry, and I think they will continue to do so over decades in the future. Right now, I think both companies sell products that even though we're shifting to an e-commerce based society, you will still need to go in person to look at the products that Home Depot and Lowe's sell. It's going to be very hard to make all of their products being sold directly online, and I think in the retail space, these are going to be 2 winners for the long term. So I own both of them. I didn't want to pick just one, and I think having them split as my entire consumer discretionary sector is a very strong position, and they have been performing very well. I'm up over 23% on Home Depot and up over 34% from Lowe's, which is a dividend king. And next, if we take a look at my consumer staples, we have Costco, Pepsi, Procter & Gamble, and Kimberly-Clark. So Costco is considered a consumer staple because individuals have to shop with them every single week or every month to get their daily needs. And I like Pepsi. I think it's one of the strongest consumer brands in the world and actually one of the best companies on the market. And it is the third largest holding in my portfolio with a market value of over $5,000. And then of course, Procter & Gamble and Kimberly-Clark, they both dominate the consumer sector and they sell products that are pure necessities. And no matter what's going on in the economy, through good or bad times, consumers are still going to be shopping for Procter & Gamble and Kimberly-Clark goods. And these two companies own some of the top brands that dominate the shelves of retailers all across the country, and I think they will continue to do so for long into the future. And then next, we have my utility holdings, which include Duke, Southern Company, and NextEra. So of course I have some traditional utilities mixed in with NextEra, who has a large focus on clean and renewable energy as well. And I own these three names because these are some solid, stable, and consistent performers on the market. Utilities are not going to give you any high double-digit, triple-digit gains in only a few months, but over the long term, they'll provide you some consistent and growing income every single year, and the capital appreciation will be not bad over every 10 to 15 year period. So these are more stable companies. They're very boring. These are ones you buy and you kind of forget that they're there, but they kind of like stabilize your portfolio, providing you some great income and not a lot of volatility on the day-to-day trading. And then finally, the final sector that I own is industrials, and I own one single company, and that is ticker CNI, Canadian National Railway. I am a big fan of the railway space, and I might add one more to my portfolio. I don't know which one yet. It will probably be UNP, but of course I will keep you updated if I decide to make that purchase. So those were all of the stocks that I own in this portfolio. Of course, it is top heavy within the tech sector, and I don't have to describe what these companies do because of course Apple and Microsoft, two of the largest companies in the world. Then we have the credit card and debit card leaders in Visa and MasterCard. And I also have some exposure to the semiconductor industry through Broadcom and Taiwan Semi. So this portfolio is built with 25 blue chip dividend paying companies who pay out a growing dividend to their investors every single year. And over 2021, I plan to consistently add more capital every single month into my existing positions to build up the value of each individual holding. I like how many holdings I have now. I don't plan on buying that many more companies. Instead, I'd rather reinvest the dividends and add more capital to my existing holdings because I've already done the research and I think they'll all continue to grow at a very nice rate over the long term. But if we see some more volatility in the market and I find companies very attractive, I have no problem adding 3 to 5 more in total for this portfolio. I have set a cap at a max of 30 different companies I will ever own at one single point in time. So right now, sitting at 25, we still have some room to add a few more names that I do have on my watch list, and I will keep you updated in future videos. So let me know down in the comments what you think of my portfolio. In this episode, we took a look at all the different stocks that I own, my dividend income, and how it performed in the month of March. So I want to thank you for watching to the end. If you haven't done so already, please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, any major market news, and of course we track the progress of my personal portfolio as well. So please hit that like button, subscribe for future videos, and I will see you in tomorrow's episode.